Markets have priced in around a 50% chance of a rate cut by the RBA on Tuesday. Morten Helt, Danske Bank. Morten, let's begin with the US economy. We have an array of data releases out this week, including manufacturing PMI out later on today, and then we have employment data on Friday. What are you expecting from these releases?
Yeah, well, in terms of the ISM later today, we have had some mixed signals about the direction for the manufacturing sector in April, following the sharp rebound in ISM over the past couple of months. For example, if you look at the regional indices, they have pointed in very different directions. But on average, we think it suggests an unchanged print. And we actually forecast the ISM manufacturing to stay unchanged at 51.8 here in April. And so this basically suggests that while the manufacturing sector cycle seems to have turned, we should not expect a sharp rebound in manufacturing production. In terms of the labor market reports on Friday, of course, the labor market is one of the brightest spots in the U.S. economy as employment continues to rise at a solid pace. We forecast that the non-farm payroll grew with 210,000 in April. This is more or less in line with the recent trend. And given that we see some increase in labor force, this should leave the unemployment rate unchanged at 5%. Now, given that the Fed is increasingly focusing on inflation, I think it's also worth to keep an eye on the hourly earnings, and we forecast that the hourly earnings rose 0.25% in month-on-month in April, implying that an unchanged wage inflation of around 2.3% on an annual basis.
The Reserve Bank of Australia is due to announce its May decision on Tuesday. Inflation data disappointed during the first quarter at only 1.6% year on year. Do you believe a rate cut is on the cards tomorrow?
Well, yeah, we had some very weak inflation data out of Australia recently. Importantly, I think most of the weakness in inflation was related to the strengthening of the Aussie dollar, and of course in April, looking at the statement from April, RBA changed its communication about the currency. That of course could imply that a rate cut could be on the table. Nevertheless, we think the RBA is still on a wait-and-see mode and should leave interest rates unchanged this week. I think the RBA will continue to focus on domestic demand, and so far we do not see substantially weakness that should trigger a rate cut. I think market is priced in around 10 to 13 basis point, indicating roughly 50% probability of a rate cut. So in case we're right that the RBA is unchanged, we should probably see some rebound in the Australian dollar in the short term. Full cut is priced in the money market by the end of the year. We still think that it is very likely that the RBA will cut rates in the second half of this year. But in the short term, we believe that the RBA will remain on hold.
And what other releases or events should investors be keeping a close eye on this week?
Well, as a Danske Bank focusing on Scandinavian markets, I would highlight that tomorrow's currency reserve data from Denmark could probably attract some attention. The EUR/DKK currency has declined substantially over the past months, now trading just above 744. So implying that the Danish krone is currently on the strong side relative to the peg or the parity at 7.46. The currency reserve data is interesting because last month was the first month in a year that the central bank did not intervene, and given that we have seen this appreciation of the Danish kroner, any indication in figures that the central bank actually intervened the other way around now, selling Danish kroner in April could imply that a rate cut in Denmark could be in the cards. The Danish central bank has not followed the ECB recently and narrowed the policy rate spread to the euro. That is partly why we have seen the appreciation of the Danish kroner. Also, the fundamental side suggests that the Danish kroner should continue to appreciate. But also, I think some of the appreciation could also be attributed to Brexit concerns, where probably some see Danish kroner as a hedge against something very bad if that were to happen in the euro. That is not our main scenario, but nevertheless, that can probably also explain why the Danish kroner has appreciated. Again, any indication that the central bank have intervened in terms of curbing the strength of the Danish kroner could imply that a rate cut could be in the cards in Denmark very, very briefly.
Thank you very much for joining us today, Morten. That is all for the moment from me, Louise Macaulay. It's goodbye.